All right, markets are open. Let's take a look at what they're doing. Let's take a look at our corn market. Our quotes are from bar chart. Well, a little bit of a surprise here. We have December corn 2.5 higher. We're now at 659 and a quarter, right in the middle of our trading range. But it's been kind of quiet, only about 4 cents wide anyway. January soybeans now 3.5 lower, and we're at 14.26 and a quarter right now. How's the wheat market opening up? Well, let's take a look at Chicago. Looks like in December, we're down 4. We're at 787.5 per bushel on the open. And in Kansas City, you have December 4.25 lower, 921.25. In Minneapolis, we have that December contract now 3.25 higher at 949. Excuse me, 949.25. I want to bring in Chris Swift of Swift Trading. He's in Nashville. You said you had some news about China. What is that?
Hey, good morning, Marlin. Yeah, we have got some reports this morning that are suggesting that there are as much as 20% of the total equivalent Chinese GDP is now in a lockdown or a shutdown. So that's a really significant number, considering that China buys a lot of our grains to us. And we kind of note that we've seen that they have bought tremendous amounts of corn from the Ukraine. So that's why we've seen them, I guess, a little bit absent from the U.S. markets here recently, is because they've been the end receiver of some of the corn out of Ukraine.
All right. What do you think that means here overall when it comes to like our soybean trade moving toward the end of the year here?
You know, when you look at it from an overall picture, Marlin, I have to look at energies being softer already, and we had really big hopes of the energy markets restraining and being able to move back up higher again. But with some of the weakness, we got the holidays upon us, and unfortunately, we hear the word recession come up a lot, and people are already kind of making that a self-fulfilling prophecy. If we hear the word recession, we automatically begin contracting back in our spending, and that is what makes or creates the recession itself.
So the crude down 282 right now. Isn't that going to keep a lid on corn, do you think?
I think it will for a little while, because I had made the point and still believe that with the grain markets being partially energy, that as long as energy continued to move higher, then grain should be supported by that in some manner. But it's just not looking like the energy markets are going to find any real big support here. We've already seen significant amount of oil being produced, but we still don't have any more refining capacity. So it's going to be a really difficult tug of war between having ample plenty oil out there, but still not having the refining capacity to create the gasoline and diesel fuel.
Are you busy today with pre-holiday orders, or is it real quiet?
It's been pretty busy this morning, believe it or not. We kind of had taken some action with those reports that we got this morning from China and trying to maybe stave off a little bad news. And but the markets themselves are very, very quiet, and it will most likely get quieter through the day.
All right. Well, we'll take a break, and we'll talk a little livestock trade with Chris Swift right after this. All right, let's go back to Chris Swift and talk a little about our livestock trade here. Overall, did you see anything in the way of cash cattle activity yesterday, Chris?
No, I didn't, and I would imagine it'll be very abbreviated. They'll run a very short slaughter pace this week. They'll come back at it hard and heavy next week. So any kind of buying that they do will be for next week, not this. Okay,
let's look at our opening trades today. We'll go to live cattle on our quotes provided by bar chart here. Boy, not much going on. December unchanged at 153.80. You have February down 17, and we're at 156.25. April just one tick higher right now. Meanwhile, on the feeder cattle, it doesn't look like they're doing too much either. January now down 35 at 181.32. March down 52 at 184.05. In this cattle complex, going back to live cattle, do you think they look a little toppy right now?
It's interesting, Marlin, because on Monday we gapped up, and gaps tend to have three different quantifyings to them. One can be a breakaway gap, which takes you out of the bottom end of the trading, then you got a midway gap and an exhaustion gap. So where a lot of people may look at that as a breakaway gap, just breaking you out of that congestion, it could just as easily be an exhaustion gap We've had 3 highs in the last 5 months, and each one of those highs has been less than $1. So when you look at that, you kind of think this is the upper end of what they had been willing to pay over the last 5 or 6 months. And again, we saw several weeks ago a huge transfer of risk from the cattle producer to the commodity funds. We've not seen much more activity in the open interest from that. But what's really interesting is now we're back up at these same levels here. And when you look at April, it's literally 160. That's pretty profitable to these cattle feeders when you're laying in feeder cattle at today's index level price.
On the lean hogs, it looks like we're mainly higher if we can bring them back up. We have December now 52 higher. We're at 84.77. February now 17 higher. We're at 90.25. Where do you see most of the volume here in the lean hog trade right now? Is it still in December or not?
No, it's in February pretty much now, and the basis is not far at all in the December. So you've only got about a $2 spread difference in the December basis, and they go off pretty early in the month. They expire around the 14th, 15th of the month, 16th. And then February is holding a little bit of a premium, and all the rest of the months are holding some premium. And that's probably not going to be a bad thing, considering similarly to the cattle, we've been liquidating a lot of hogs and just don't have the hog production right now that would suggest that we could have a big bear market.
Interesting stuff. Well, thanks for joining us here, and you have a good Thanksgiving holiday with the family. I know you will. Chris Swift of Swift Trading with us from Nashville. Suzanne, the markets are open. I'll throw it back to you.